Africa's rapid growth and urbanisation has resulted in enormous demand for sound infrastructure across sectors, including power, transport and communications. To meet this demand, which will require enormous amounts of financing, Stanlib has launched an African infrastructure private equity fund, which will invest in equity stakes in projects across Africa. Andy Lowe joins us in studio to explain where he sees the opportunities. And I suppose let's put that at the top of our discussion. The hottest areas, in your opinion?
We've got a focus of South Africa, primarily renewable energy assets. The South African government has recently launched a renewable energy program called REAP, which has brought about numerous equity investment opportunities for infrastructure investors. We've seeing a number of opportunities, primarily in wind and solar PV.
The renewable energy space is a key focus from the outset.
Yes, absolutely. There have been 28 projects that were recently closed in November of last year, putting in something like 30 billion rands worth of funding into South African renewable energy projects. 2 months ago, there was another phase of renewable energy projects that were closed. Again, close to 20 billion rands worth of funding went into South African projects.
Andy, I mean, it's quite amazing to see how quickly these programs can be put together and closed. Obviously, this is a great example of how the public sector and the private sector can work together. You've tapped 4 of the projects initially to invest with the fund. Just take us through those projects and were they in the first round or the second round, and how many rounds do you expect to participate in as these projects get rolled out?
Sure. This fund originated off the Standard Bank balance sheet. The team, the assets, the pipeline have migrated to this fund. Whilst we were on the Standard Bank platform, we closed 2 projects in the first phase of the renewable energy program. One was a wind project, the other was a solar PV project. From the outside, it looks like these projects have happened quite quickly, but we've had quite a few misses along the way, and it's been probably 3 years of work to get to this point. So we closed 2 projects in the first phase, we've closed another 2 in the second phase, and we hope, if we get enough financial backing from third-party investors, to close significantly more in the future.
Let's look at your other focal areas over and above renewable energy. Which will be the next space that you try and monetize?
Sure. We've got a sub-Saharan Africa focus, so we are looking at the broader African continent, particularly where Standard Bank has a footprint, given its relationships in those markets. And we will look to roads as a key focus area. Roads have proven themselves to be excellent equity investment opportunities. Water is going to be a key issue, not just in South Africa, but in sub-Saharan Africa. Following mines, looking at their water desalination projects associated with that mine infrastructure. Rail, pipelines is a key focus of ours. And again, the shale gas opportunity, particularly around Mozambique and South Africa, will be a key focus of ours going forward.
Andy, just in terms of the projects, obviously you've got you've seeded the fund with 500 million from Standard Bank. You're looking for another 500 million to close this fund. R1 billion in the scheme of infrastructure on the continent is probably going to be a drop in the ocean if we're looking at this. So, what's the plan going forward, and what can investors in the fund expect in terms of returns and how this plays out? I mean, we're obviously familiar with private equity, but I presume it's going to be a long investment horizon that investors need to consider.
Warren, you're right. It is a drop in the ocean. To put some context to that, Africa needs $90 billion of infrastructure capital commitments per annum just to meet its own demand. $90 billion, in the context of our R1 billion fund is just enormous. We see that both as an opportunity in that we need a tiny fragment of the market to be successful, as well as a huge opportunity for investors to participate in the infrastructure space above and beyond the capability that we're offering. Having said that, we're a minority equity investor. We don't want majority stakes. Given the high gearing in these infrastructure projects, we can still participate in projects that have a total cost of 2.5–3 billion rand. And that's a big project. 15 years ago, an Aussie 40 company only had a market cap of 3 billion rand. So in that context, there's still significant projects in the South African and indeed African landscape.
Earlier you mentioned that you'd be leveraging the Standard Bank footprint. Perhaps just for those who are not necessarily au fait with the Standard Bank footprint, can you give us a little in terms of geographic weighting, West, East Africa, Southern Africa?
Sure. This particular fund has a bias towards South Africa. We have a 30% allocation for non-South African projects, and that's primarily because a lot of the opportunities are South African focused at the moment. Having said that, the remaining 30%, we will look to deploy that capital in countries such as Mozambique, Namibia, Botswana, Nigeria, Ghana, Kenya, Tanzania, all the countries in sub-Saharan Africa that have strong regulatory processes and that have credit-worthy counterparties.
And the sense I get from this is that a lot of these, I guess, all the projects you're going to be investing in are based on the pay per user principle. So is this not going to be almost like an annuity type of fund? The returns investors are going to get from investing in a fund like this is going to come quite frequently in the form of income distributions, or am I mistaken?
No, you're 100% right. This is the first fund on the Stanlib platform. It's a private equity fund. We're looking at taking equity stakes in infrastructure projects that have some sort of ramp-up or construction element to them. The reason for that is we think we can price them properly and we can structure these transactions properly. Once we've taken it through that phase, then it very much is a yield kind of asset, and it's then that this fund will look to dispose of that equity to a yield infrastructure investor, such as a pension fund or a life company.
Where are you hoping to attract money from? Are you going into the offshore arena in a big way?
Bronwyn, we don't think we need to at this stage. As we've said, it's a relatively small fund. We've already got 500 million rand of seed funding from Liberty. The remaining 500 we think we can source from local pension funds and life companies. We're having discussions with those entities at the moment, and there's a lot of appetite to participate. The question is just getting the structuring right to allow that participation.
Andy, obviously, is there, for the retail investor that would be interested in something like this, this is not being open to retail investors as yet. Have you had any interest though from fund-of-fund managers where investors may be able to participate in that form?
We have. There are a few entities that are looking to put together a structure which will allow retail investors to participate. We have had those conversations, but at the early stage at the moment.